Ladies and gentlemen, good day and welcome to the earnings conference call of Godrej Properties Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us on Godrej Properties Q2FY22 results conference call. We have with us Mr. Pirojsha Godrej, Executive Chairman, Mr. Mohit Malhotra, Managing Director and CEO, and Mr. Rajendra Chitawat, CFO of the company. We would like to begin the call with opening remarks from the management, following which we have the forum open for an interactive question and answer session. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Pirojsha to make his opening remarks.
Good evening, everyone. Thank you for joining us for Godrej Properties second quarter financial year 2022 conference call. I'll begin by discussing the highlights of the quarter, and we then look forward to taking your questions and suggestions. I hope you and your families are staying safe and doing well. Fortunately, the past few months have seen a dramatic reduction in the severity of the pandemic. There has been strong progress in vaccinations across the country, and at Godrej Properties, over 98% of our employees have had at least one vaccine dose. The economic recovery also seems to be gaining pace, with the real estate sector being an important beneficiary. The process of consolidation that has been underway in the sector for some time has gained momentum during the pandemic, and stronger developers are rapidly gaining market share. After a weak start to the financial year due to the severity of the second wave, I'm pleased to share that Godrej Properties has bounced back strongly in the second quarter. Our sales during this period stood at more than 5x the previous quarter, backed by an excellent response to our new launches and healthy sustenance sales. The total value of bookings in the second quarter stood at rupees 2,574 crore, up 140% year-on-year, and was achieved through the sale of 3,026 homes with a total area of 3.61 million square feet. Our launches across the country performed very well, with launches in Noida delivering sales in excess of 500,000 square feet. Our Noida project, Godrej Woods, saw sales of rupees 584 crore in the launch of its second phase, making it one of the most successful recent project launches in the country. With the ongoing festive season and our exciting launch pipeline for the second half, we are confident that this period will be exceptionally strong from a sales perspective. We also focused on opportunities to take price increases across our portfolio, both to offset commodity price inflation and to aid in margin expansion, and in fact have already taken price increases in a majority of our projects. On the operations front, we continue to ramp up our workforce strength, which stood at 164% of our pre-COVID strength as of the end of September. As a result, construction activity is progressing well, and we expect to deliver a significant number of projects over the next 12 months. Since we did not deliver any project in the second quarter, our accounting revenues were muted at rupees 290 crore, while our adjusted EBITDA stood at rupees 107 crore and net profit stood at rupees 36 crore. However, operationally it was a strong quarter with robust net operating cash flow of rupees 426 crore. Our entire team was also proud to be recognized for the second consecutive year as a global leader in ESG performance by the Global Real Estate Sustainability Benchmark. From a business development perspective, we added a new redevelopment project in Wadala in Mumbai, which offers a saleable area of approximately 1.6 million square feet. The project is in very close proximity to Matunga 5 Gardens, and we expect it to be launched next financial year and to be able to generate revenue well in excess of rupees 3,000 crore. Given the business development pipeline, where we have a large number of advanced stage discussions, we expect significant project additions in the second half of the year. We also exited 2 of our projects in MMR, which were Godrej Sky and Sundar Sangam, due to multiple issues with the joint venture partner being unable to perform their obligations. Our debt-free balance sheet provides us the opportunity to significantly expand our development portfolio. Our focus over these next few quarters will be to add high-quality new projects to our portfolio while substantially increasing our sales through the launch of a large number of new projects across the country. We believe this will allow us to capitalize on the dual opportunity of improving sectoral demand and rapid consolidation. On that note, I conclude my remarks. Thank you all for joining us on the call. We'd now be happy to discuss any questions, comments, or suggestions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. First question is from the line of Puneet from HSBC. Please go ahead.
Yeah, good evening and thank you so much for the opportunity. While you guys rarely disappoint on sales, my first question is actually on the joint venture. If I look back to last 6 quarters, one would have thought that COVID period would throw up a lot more opportunities in joint development. We haven't seen as many deals getting concluded by you. Any color you can give on what's happening there?
Sure. I think, it's more of a timing issue as we see it. I think the deal pipeline has been healthy. We are focusing disproportionately on fairly large, impactful deals. So I think, Wadala redevelopment, for example, we think is one such deal with, 3,500 crores of revenue likely from that. So I think even a few deals of this scale can be quite meaningful for us, and I think that's the primary focus. But we agree that the reported deal numbers over the last 6-8 months have been very underwhelming. But I don't think we're seeing it as a cause for concern given visibility on kind of advanced stage discussions and likely closures over the next few months. So hopefully we can have a very strong second half, and that's the expectation as of now.
Okay. And any color on whether the nature of deals have changed in any way, where you're giving higher upfront share of cash or anything of that nature, or are you targeting more land-based deals?
Yeah, I think we're looking again for what we would describe as sort of higher impact deals with net profit potential of 300 crore plus. It's not to say that we will only do such deals. I think we remain open to all opportunities that provide at least 100 crore of net profit. But I think the shift has been towards deals where we think the total economic impact can be larger for the company, and those typically will be, of course, also projects where the capital commitment will be commensurately larger.
Okay, that's very useful. My second question is on the sales within the region. So Mumbai, NCR, Pune, have all been good, but I think Bangalore sales are yet to reach a place where you should be. Any special efforts you are putting there, or is Bangalore market generally more competitive?
Yeah, I think if we had to do a ranking of our relative performance in each region from a scale perspective, I think we'd probably say that we've done pretty well in NCR and Pune over the last couple of years in scaling up the sales volumes there. And I think in both Mumbai and Bangalore, we'd say there's a lot of opportunity to do better given the scale and opportunity in the market. I don't think it's an execution problem, because if you look at sort of unsold inventory to launched inventory in Bangalore, it would be at a very, very healthy level. So I think the projects that we're bringing to market are doing well, and we're not seeing any concerns. I think the challenge is we haven't brought as many projects as we should have to market. In Bangalore particularly, we do have a couple of new launches lined up over the next few months, so I think that will help boost numbers. In Mumbai, we have a lot of exciting projects in the pipeline. I think it's all about bringing those to market now, and also adding more projects in both of those cities. But I think it's, from our perspective, more an issue of we haven't had enough active projects in the cities rather than any concern with the sales through rate or performance of projects that we have brought to market.
Understood. That's very helpful. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hi, and congratulations on the strong sales performance. So first question is on pricing. You already mentioned that you have taken a few price hikes during the quarter. Can you detail a bit which markets are doing better? What is the average portfolio price looking like now?
I think it's still relatively modest price increases that have been taken. So I'd say probably low to mid single digits across most projects. I think, given commodity price inflation, I think that focus on doing this across the board has intensified over the last month. But it's nothing as of now that's a very sharp price increase or anything like that, because we do want to balance the need to ensure margin expansion with the need to continue to sell strong volumes in this market. But our sense is that the pricing trajectory that the residential market is clearly upwards, and we think next year the industry as a whole, and certainly us as well, will likely see more meaningful price increases. But I'd say as of now it's low to mid single digits and pretty much across all markets.
And just hear a bit on your philosophy as well on sell-through. So, for example, in Noida, we almost had 70-80% sort of sellouts now back to back between March and September. Could you have, say, taken a 5-7% higher price and still sold a reasonable amount? Is that something you would like to pursue now?
That's actually exactly what we did. So the second phase was sold at a 5-6% higher price than the first phase. Unfortunately, saw very good volumes despite that price hike. Look, I think it's always a fine balance on pricing, right? You obviously want to price as good a price as you can get, but we're quite clear that we don't want to sell very low volumes during the construction phase, because we think that becomes a self-defeating kind of strategy, as you then have to invest a lot in construction, your interest costs go up. But I think that perceived margin expansion on having very high prices that don't see effect in sales at launch actually doesn't play out as per that plan, according to us. So I think we do want to see 50 to 70% of sales in our launch phases, relatively early in the day, so that the projects become self-funding from a cash flow perspective. And I think, remember, there is pricing increases both at the project levels and certainly at company level. We have a very large portfolio to benefit on those price increases from. So, for example, even this Noida project, while we sold, something like 1,100 crores in the project over the last 6-7 months, it's still only the first two phases. We've only sold roughly 1 million square feet of well over 2 million square feet project. So I think even at the project level, there is significant upcoming inventory, but certainly at the company level, prices move up sharply next year. I think there'll be a large number of projects in which we can benefit on that.
Thanks. I mean, that helps. Just one more question, if I may. You have about 11 million square feet of launch pipeline now for the second half. What's a reasonable, sort of success rate to assume? I mean, is say 60-70% of that pool should be launched, or any sort of project, say an Ashok Vihar or a large one, which can, come relatively soon?
Yeah, I think Ashok Vihar is clearly one we're probably most excited about in terms of the upcoming launches, and we certainly hope to get that done. Probably not this quarter, but early next quarter. Look, I think all the projects, there are none of these that have 100% regulatory approvals, otherwise we would have launched them. At the same time, our best estimate currently is that all of these will get regulatory approvals in time for a March launch, March or before launch. I think our experience is that typically, if we have 15, 16 projects, 3 or 4 of them do end up slipping out of a period given regulatory delays. So hopefully we don't have that this time, but I think we have enough projects lined up that even if that happens, we think the second half of the financial year will be probably the best ever 6 months for the company from a sales perspective.
Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi. Good evening. Thanks for taking my question. So two questions from my side. First, with regards to the deals that we are looking on the business development front, have we seen any changes on the land prices front? I mean, considering the buoyancy in sales, have we witnessed a phenomena that maybe the landowners are asking for maybe better terms compared to, let's say, what was the situation a year back? And second is, I mean, if it's possible to give some color about the projects which led to revenue recognition during this quarter. Thank you.
Mohit, you want to take the first one and Rajendra then take the second?
Sure, sir. So on the land front, we haven't really seen any major shift in landowner behaviors or expectations. It largely remains very similar to what the trend was over the last few quarters.
Great.
Parvez, what was your second question?
Which were the projects led to revenue recognition this quarter? I mean, some color on it would be.
Okay. So revenue recognition, we are expecting two plotted deal to go into revenue recognition this financial year. One is Faridabad. Sorry, hello?
Which was the ones in the past quarter, Rajendra?
So I'm asking about...
Nothing has come into the past quarter. Q2 there was no recognition OC which has... Only in Q1 there was Elements 1 tower which has received. Q2 there is no OC which has come in. But going forward we are expecting two plotted deals to come in for revenue recognition.
Sure. Thank you.
Thank you. The next question is from the line of Kunal Tayal from Bank of America. Please go ahead. Mr. Kunal Tayal, your line is in talk mode. Please go ahead with your question. As there is no response from the current participant, I've muted the line. We'll move on to the next question from the line of Girish Chaudhary from Spark Capital Advisors. Please go ahead.
Hi, good evening. Congrats on the sales performance. Firstly, on the cash flow front, how are we looking at an operating level for the remainder of the year, considering your balance collections and the construction schedule? So this quarter it was 426 crores. Can we see this scaling up meaningfully for the remainder of the year, like in the range of 700-800 crores?
I don't think we want to give any guidance on cash flows, but certainly I think, if we draw out the collections profile of the company over the next 5-6 quarters, we will see quite sharply increased collections over that period. I don't think we'd want to give any specific guideline on operating cash flows for the rest of the year, but we do expect it to be healthy.
Got it. And secondly, while you did share the planned launches, which is 11 million square feet during the remainder of the year, just wanted to get a sense on what's the current unsold inventory levels you have, just to assess in case if the launches slip due to regulatory approvals, can the sustenance sales take care of the growth part?
Yeah, we have roughly about 1 year's worth of sales as available for sustenance sales. So I think that's a healthy level to look at. Our unsold inventory to launched inventory percentage is actually the lowest it's ever been for the company. But I think the absolute inventory available for sale is quite healthy. But also I think even again, if some of the launches get postponed for any reason, we do have a very strong launch pipeline for the second half of the year. So I think even factoring in some delays, we don't expect launches to be low in the second half.
Great. Thanks, Pirojsha.
Thank you.
Mr. Chaudhary, does that answer your question?
Yeah.
Thank you. The next question is from the line of Kunal Tayal from Bank of America. Please go ahead.
Sure. Thank you. Sorry, I was on mute earlier. Pirojsha, my first question was, just hoping to get some more color around how intense can the capital deployment or business, development opportunity look like in the coming 6 to 12 months. and if that would afford a chance to sort of still maybe increase the skew in favor of Mumbai and Bangalore?
Yes, I think we certainly expect to see much higher rates of business development in the next 6 months as compared to the last 6 or 8 months. And I would say that within the 4 markets, we're disproportionately focused on Mumbai and Bangalore. In both, we have a healthy pipeline, so hope to see significant closures in both of those markets. And as I said, also, I think one is sort of the number of deals, and I do think it's important to ensure a strong number of deals, because that would indicate that we're entering new micro markets, expanding the number of projects in which we can sell simultaneously. But it's also important to ensure that the impact levels of the deals that we are doing is going up. So, for example, again, this Mumbai one we announced, we do see as a relatively high impact deal. So yes, I think both we should expect to see the quantum of the deals go up, the focus on Bombay and Bangalore hopefully yield results, and some more impactful projects getting added as well.
Got that. Thanks. And then the second one was just a bookkeeping question. Broadly, of the $1 billion of deployable cash that you currently have, what could be the development value against the same? Should we assume a 6 to 7x as an indicative range?
Yeah, I think that's probably fair. I think 6 to 7x on the deployment is roughly what one should expect for a booking value.
Right. All right. Thank you so much.
Thank you.
Thank you. The next question is from the line of Samar Sarda from Axis Capital. Please go ahead.
Yeah, hi. Good evening. A couple of my questions have been answered. One bookkeeping question, Rajendra, was like the revenue recognized for the quarter was from which projects? Like we understand that no projects were completed during the quarter. So which unsold inventory got sold? A rough breakup could help.
There are various small projects, some in Ahmedabad, some in Trees, there was some portion of TDR we sold. So there are various small projects, unsold inventory got sold. So that's how the total stacks up. And then obviously there is a DM fees, which is a part of an operating income which keeps coming across the project.
Okay. And Pirosha, on the business development part, like you've already answered it a couple of times. If we have to put a timeline to the deployment of the 37 billion we raised in the fourth quarter, could we safely say like within the next 3 or probably 4 quarters, the entire amount might be deployed?
Yeah, I would hope that within next calendar year we'd fully deploy at least the equity component of that. And certainly, again, I think the idea is not just to deploy equity. I think we can gear the balance sheet a bit against that. But yes, I think we're looking. This is a big priority for the company. So hopefully, very significant momentum can be demonstrated on this over the next 3-4 quarters.
And since you mentioned about the gearing part and the balance sheet, like the net gearing is pretty low, debt has been going up slightly, probably using the debt for the projects. So this 45 billion out would be absolute gross debt number. What are the levels you will be comfortable from an absolute debt perspective on the balance sheet?
I think the way we've looked at it is I think anything up to 1:1 gearing, we're relatively comfortable. So that would imply roughly 8,000 crore of capital that could be deployed. I think given the enhanced size of the balance sheet, maybe we'd have a slight conservative bias to going all the way up to 1:1. But nothing has majorly changed. I think we still have that $1 billion plus of capital that we can deploy over these next few quarters.
Okay. Thank you, and happy Diwali to you and your team.
Many thanks, Amar. Happy Diwali.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal Institutional Research. Please go ahead.
Yeah, thanks for the opportunity. So my question is on cash flows. Firstly, I think in last 2 quarters you have really ramped up the execution part. So we have seen around 700 crores of construction spend in last 2 quarters. So in terms of collections, how we can see that moving going forward, and considering last year, majority of our sales also had happened with some deferred payment scheme. So how is the trajectory that we see going forward from here on in terms of collections?
Yeah, I think it will be a sharp upward trajectory is our sense. I think this year should be 30-40% higher than last year, and next year should similarly be 30-40% at least higher than this year. So as you rightly pointed out, I think there are a couple of things driving this. One is for some sales, for example, in first quarter of last year, a significant number of sales were done under deferred payment plans. So I think a lot of those collections will be happening over the next few quarters. Equally, we're going to be launching a lot of new projects. I think the overall scale of bookings of the company we expect to grow considerably over the next couple of years. So all of that we do think will yield much higher collections, and I think the growth rate that is probably safe to assume for these next couple of years is probably in the range of 30 to 40% over last year's numbers.
Sure. So we should see improvement happening from Q3 onwards or maybe Q4 onwards. How are you seeing it?
I think hard to. I don't have offhand the exact number quarter by quarter, but yes, I think the trajectory should be clearly upward. Depending on when some projects complete, and you get a larger tranche of collections related to that, there will be some quarterly movement. But I think overall should be trending significantly higher.
Sure, got it. And on the business development, so any markets that we see a challenge to do business development deals, specifically like in Bangalore, some markets, I think we are hearing that local larger developers are still comfortable in terms of adding business deals. So are we facing any challenge in that market in terms of business development?
I think, look, there's no market where there's no competition and that we are the only game in town or something like that. So I don't think that's probably a reasonable expectation to have. But overall, if you look at it, in each market, there are probably only a handful of developers that have both the execution capability and the balance sheet to support, deal acquisition. So I think competition within this set of top 4 or 5 developers in each city is going to be a feature to stay. I don't think that, I think most of the leading players in each market have fixed their balance sheet, have the execution capability to deliver. So we'll be looking to add projects. We feel pretty good about our ability to compete head-on with any set of developers in each of these markets. I think the brand is good. For joint ventures, we feel we have a distinct advantage with people wanting to partner with us. And with the balance sheet today, we can also, compete for transactions that are outright if we see value in them. So yes, there is of course competition, but I don't think the competitive intensity is very high at the moment. The vast majority of the sector continues to be relatively struggling with liquidity issues. The uptick in sales that has been visible across all the stronger players, don't think is equally evident, for the industry as a whole. And there are a large number of developers who are still struggling with sales and therefore looking for opportunities to monetize their land bank. So I think overall, we remain quite confident on the business development prospect.
Sure. Thank you. That's it from my side, and wish you a very happy Diwali to the whole team at Godrej Properties. Thank you.
Many thanks. Happy Diwali.
Thank you. The next question is from the line of Manish Gandhi, individual investor. Please go ahead.
Yeah. Hi. Good evening. My first question is a micro project wise. So Hinjewadi, Pune, which we are launching in the next few quarters, why we are just launching 0.4 million where the project size is 10 million, the IT is booming, and we are doing so well in Godrej Hill Retreat. So I was just wondering that.
Mohit, do you want to take this?
So thanks, Manish. Manish, we look at this project, both Hinjewadi and Mahalunge, we look at it as one project. And right now the focus is to continuously launch projects in Mahalunge, which is the Godrej Hill Retreat project. And you have seen how strong the sales have been in this project. We would like to launch Hinjewadi later. Of course, we will launch a big phase, but at a much higher pricing. So right now focus is on Mahalunge, and if you see the Q2 launch also, we sold close to 400 crore in our recent launch, and we would like to continue to sell that first.
Right. No, it is given in the presentation that we'll be launching Hinjewadi 1 and 0.42 million. So that's why I was confused in the new project launch.
Okay. Yeah, I think that was maybe a small phase we would have planned, but as of now, the idea is to continue the Mahalunge launch. We may launch phase if it comes, but the likelihood is more on Mahalunge side right now.
Okay. And the second question is a broad question. See, now the real estate market is picking up so well, and all the big developers or the major developers have good cash flow. So they are also now launching many projects and going to launch. So our differentiation in competitive advantage, one was launches and the other was, of course, timely delivery. The gap is getting narrower. So what next we are doing to maintain our competitive edge? So as Jeff Bezos said, the customer delight, or yesterday's wow becomes today's normal. So what else we are doing? I have one suggestion. I don't know whether you guys have. Do you guys look at something like tie up with the live space or something like that? Online interior. I don't know, but I would like to hear from you.
Mohit, do you want to take that?
Sure, Bharat. Yeah, I think rightly pointed out, Manish, that as the industry matures, some of these differentiators might become less in terms of differentiation. Although I still feel sales is something and business development is something which is a strong differentiator for us as an organization. But we were thinking about this question almost 2-3 years back as an organization, and we have identified customer centricity as a key differentiator for the brand. In fact, we worked on our purpose, which we have been unveiling recently, about bringing everyday joy to our customers. Over the last 4 years, there has been intense focus on improving the customer satisfaction, which we measure through a score called Net Promoter Score, and we have seen it going from a single digit to as high as closer to 50 plus over the last 4 years. So overall as an organization, we want to be the most customer-centric organization and create wow for our customers, both at the time of the whole experience of buying and 3 years of pre-possession, and also once they come into our societies and live, they should experience a completely different lifestyle in our home. So that is something we have been very focused and working on over the last 3-4 years, and I think that will be the long-term differentiation for the organization.
Okay. Thank you so much. I'm done. All the best.
Thank you. The next question is from the line of Himanshu Zaveri from Dhruv Gems. Please go ahead.
Yeah, hi. My next question was regarding the sales in Mumbai region. And I particularly reason why they are a little slow in selling in Mumbai.
Himanshu, can't hear you properly.
Hello.
Mr. Zaveri, your audio is breaking from your line, so please check.
Can you hear me now?
Yes, sir. Better. Thank you.
Yeah. So my particular question was regarding the Mumbai region. Any particular reason why we are a little slow in selling our projects like the Chembur one and the Chandivali one? Because other regions where I'm seeing, the NCR, Pune, Bangalore, everywhere, wherever you are launching, almost we are selling like 70-80% of the launch inventory. Or any particular reason we are going on higher margins because we own those two projects? Yes, I think it's more a question of, I think these are both relatively high-priced inventory, which tends to be a little bit more steady but slow sales. And two, on both of these projects, we've launched at quite a premium to the market, because we know that the project sizes are relatively small. Both of these are 4-5 lakh square feet kind of projects. So I think the focus has been on ensuring strong margins, and we're not overly concerned about being able to sell those volumes over the life of the project.
And another question on Mumbai only. So next, if we want the company to go on the next level of sales and all, so we all know that the other three regions are doing very well. So particularly in Mumbai, we have to concentrate more on the deals and all. I think we have a lot of deals in the pipeline already. We have projects, and now the execution and the sales have to be there for the Mumbai region to do very well, right?
Yes, I think of course we'll have to execute all of these projects we're adding well. I do think that some of the challenge has been not having enough projects in the market. So I think we've been trying to address that over the last couple of years with business development. Mumbai projects, particularly things like redevelopment, do tend to take a little bit longer from a regulatory approval and time to launch perspective. But I think we're very confident of seeing the scale of our Mumbai business increase sharply over these next year or two.
Okay. Happy Diwali to everyone, and thank you.
Thank you. Happy Diwali.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
I hope we've been able to answer all your questions. If you have any further questions or would like any additional information, we'd be happy to be of assistance. We'd like to take this opportunity to wish all of you a very happy and prosperous Diwali. On behalf of all of us at GPL, thank you for taking the time to join us today. All the best.
Thank you. Ladies and gentlemen, on behalf of Godrej Properties Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.